What's going on, everyone? Welcome back to the Encrypted Capital recap for Friday, January 29th. Let's get right into it here. So I had a lot of my friends hit me up the other day asking me what I thought of the GameStop pump and what was going on with Wall Street bets and all that good stuff. And I let them know that I actually just made a video on the 7 stages of a pump last week and exactly how all of that works. And after taking a look at the charts, which I'm going to get into here in a second, it appeared to me that this was a classic case of a orchestrated pump and dump, most likely used by institutional money. And this article I have from Barron's here, it says it wasn't just small investors behind the GameStop frenzy, some fear. And it goes on to say some investors have an upset stomach from the trading action of the past few days. Now others are wondering if Wall Street was behind the worst of it. And I do think they were. On Wednesday, the major US indexes fell more than 2% and had fallen almost 3% between Tuesday and Wednesday. In short, the volume of bullish call options on heavily shorted stocks surged. The brokers who were write options contracts hedged the contracts by buying stocks, sending those stocks even higher. The short sellers then must cover their positions by buying the shares of those companies back. In order to fund those purchases, those short sellers sold out of long positions in other stocks to raise the cash, and that pressured the broader market. It says now investors are increasingly concerned about market structure. Wrote Dennis DeBuscher, head of portfolio strategy research at Evercore. Under that logic, yesterday's market sell-off and volatility spike was not just a de-risking, but a sign of something more systemic. He doesn't share the concerns of the investors he had spoken with. And then I have this part highlighted right here. So it says, there's absolutely institutional money at play here. David Traynor, CEO of research firm New Constructs and former analyst at Credit Suisse, told Barron's, if you look at the tape, there were 10,000 share blocks being traded, he said, which suggests professional traders were part of the action. Absolutely. And so if we go ahead and take a look at the GameStop chart here, I found that there was accumulation that was taking place here all the way back in August, essentially, August, September, just before earnings. And you can see that it slowly started moving up, and we didn't get our pump until, 6 months later here. So what was really going on here? I do think that there were institutional money that were accumulating during this time frame, all the way from roughly August up until now, building positions. And if we go back to the God PDF, the Game of Deception PDF that I made a video on last week, we can see that there are 7 stages to the pump, position building being one of them. And over here, I do think that there was clearly position building going on here. There were people that were in the know that did know what was going to take place. Michael Burry, the gentleman who the Big Short movie is based off of, who bet against the subprime mortgages, he actually has to disclose his holdings, and he did say that he liked GameStop a lot and that it was undervalued, mainly because they had discs. And what he meant by that was the fact that people on PlayStation and other gaming consoles were still going to be using disc media as opposed to just download media, and that's why he was bullish on GameStop. I don't know if I really believe that 100%. I always like to look at the other side and try and figure out exactly what's going on here. And it's my position that these guys all know each other. They all have rich friends. They're all in on stocks together. And I do think that the group Wall Street Bets obviously did play a part in this. But I do think institutional money was already involved in the Wall Street Bets Reddit group. If we go back over to the God PDF, the way that the gentleman who pumped Dogecoin back in the day got his market share was he would go into the discussion or online chat groups, and he would go ahead and spout out some information on where he was going to take prices, et cetera, and thus getting his wealthy friends to buy in and go along for the ride with him, all the while dumping on retail traders who were just in it to make a quick buck. So if you look at what happened, Robinhood goes ahead and they shut off trading on GameStop and AMC, so people can only sell, thus manipulating the price down. And then you also have to take into consideration that the hedge funds, while maybe some did lose out on their short positions, they were definitely able to make it all back up when they shorted from the top of the market. And so it's really hard for me to fathom that the people that control Wall Street in general, the big institutions, would actually let retail traders wipe the floor with them and put them out of their positions. I do think that they were shorting the top and that they were definitely along for the ride going up. I know Citadel was one of those that was mentioned involved in this pump and did buy out Melvin Capital for, I believe it was $3 billion after their shorts got liquidated. So it's a lot of news to take in. I realize that this is another perspective on it, and I do think that this is probably more accurate than just the fact that a bunch of people in the Wall Street Bets group that live at home with mommy and daddy threw in $500 or $1,000 and are now making a ton of money and liquidating these Wall Street guys. I think it goes a lot deeper than that. And what I do think is going to happen is that you're going to see a lot of these people, a lot of these institutions go after cryptocurrencies, which we saw with Dogecoin. Going into my next article here. We have Dogecoin soars another 600% as Reddit frenzy pushes the token into the top 10 cryptocurrencies by market cap. And so it's funny, when my friends were asking me about this, I said, guys, I did a video on this already. I did it on Dogecoin last week and exactly how that pump was orchestrated. I'm looking at the same exact thing happening here with GameStop and AMC. And they didn't quite believe me right off the bat, but I think as they dove deeper, they did realize that this is exactly what's taking place. And then sure enough, the very next day, who did Wall Street Bets go after? Dogecoin as their next pump. So, in my opinion, this stuff is all tied together. The wealthy do run in the same circle, and it's interesting that they're able to pull it off and put it off on a Reddit group. But I really do think that big money is playing in these circles, and they're doing what they talked about in the God PDF, which is getting your friends and your other retail traders involved and basically selling your positions to them as they all FOMO in. So let's get into Dogecoin real quick here. Dogecoin's rise extended Friday as the crypto-themed subreddit Satoshi Street Bets fueled a further rally. Bitcoin too climbed 15% on the same day after Elon Musk changed his Twitter bio to include it. Again, talking with people that all run in the same circles, Elon Musk. I feel that Elon Musk can go ahead and tweet out anything, and then his pals will go ahead and pump up the coin, making the general public think that it's really the fact that Elon put that out there that the reason the pump is taking place, when in all reality, Elon puts that out there when his friends already have their positions set. So please keep that in mind. Trading is a zero-sum game, which means for every winner, there is a loser. And the losers are going to be the retail traders. Even with the GameStop pump, think of how many people went and jumped in at $100, $200, $300 and then didn't sell or couldn't sell or, whatever. And now they're underwater on their position. So I really do think it's the retail traders that end up getting dumped on, and they're not necessarily the cause of all these pumps. So we can go ahead and we can look at the Dogecoin chart here. And Dogecoin, you can see over the course of just 22 hours, you're looking at a 981% gain. It has retraced from roughly 10 cents, currently trading at 4 cents. And like I said, who are all these people right here that are getting dumped on right now? It's everybody who's FOMOing in. So, are they really sticking it to the man? Not necessarily. Chances are the man's probably already playing in these same pools. So just keep that in mind when you're trading. Definitely don't go ahead and chase a pump. You guys want to set your positions in a basket of assets, and then you want to sell your profits and exit your positions, or at least partial positions, in order to invest them into assets that have not yet pumped yet. So next up, we have Robinhood restricts crypto trading due to extraordinary market conditions. So we all know this. Robinhood decided to halt the instant deposits for crypto purchases today. Robinhood confirmed the move, saying it was switching off instant deposits due to extraordinary market conditions. The move comes after Dogecoin, a digital coin based on the popular doggy meme, spiked as much as 800%. So, like I said, these guys, they're controlling the markets, and they have all the excuses in the world for why they're doing just that. They can say it's because of volatility. They can say it's because of whatever, but really there is a hidden agenda at play, and you are not going to know what that is. This is all taking place behind the scenes. They have to sell to the dumb money, and the retail traders are the dumb money. So find those assets that are suppressed, get in early, and let the pumps come to you. Do not go chasing the pump. That is going to be the easiest way to go ahead and get wrecked. Next up, we have the article regarding Elon Musk. So the Bitcoin to online pet where Papa Musk lures investors. Like I said, they're all running in the same circles. And anytime this guy tweets about anything, his tweet led to a 14% jump in the cryptocurrency. These guys aren't out for the best interest of the public. It says the Twitter handle of the world's richest person has joined the growing list of things to watch for those trading stocks for personal or professional purposes, and comes amid the rising prominence of the Wall Street Bets Reddit chat room that drove skyrocketing gains for GameStop shares. So this is all insider trading to me. You guys really need to go ahead and read this God PDF here. It goes into position building. It goes into suppressing prices, test pumps, the actual pump, the shakeouts, the reallocation and distribution, and the exiting of the dump. It goes into all this stuff. And this is exactly what's happening on a larger scale. Only now it's not happening in the chat rooms. It's happening with, essentially people like Elon Musk who are now market makers because they can get so many people to go ahead and basically buy up whatever it is that they're selling. So please keep an eye out for that. I know I keep reiterating that, but you guys don't want to get wrecked. We're in it to all make money and, further our lives and make them better for us and our families. And, these rich guys, they're not looking out for us. So next up, I have Kraken, Coinbase suffer outages amid market volatility. Yes. Again, like we talked about, exactly what Robinhood was doing, Kraken and Coinbase, they're doing, they're having outages, quote unquote. Excuse me. This is all pure price manipulation. Spillover from market drama on Wall Street is crippling U.S. crypto exchanges. It says Kraken's trading is in post-only mode after being relegated to full maintenance mode Thursday morning. 17 hours after the issue was opened, Kraken updated its status page to say new limit. Post-only orders can be submitted as they continue to work on a full fix. This is not a fix, guys. This is just them rigging the markets. You guys got to wake up. This is not... I can't stress this enough. This is not a game that they want the little guy to win. It says the company is battling a second day of severe connectivity issues. Go figure. Thursday saw an outage of the exchange's trading API, although the web interface was still operational. So, Coinbase also suffered the performance degradation is what they're calling it. This is all bullshit, guys. I'm so sick of this. Let's go on to the next article here. We have retail investors flock to Coinbase wallets preparing for a direct listing. So as popular trading platform Robinhood runs into troubles, retail investors who are looking for new ways to trade seem to have their eyes set on US-based crypto exchange Coinbase. There's a tweet here that Coinbase is now the number 9 most downloaded app in the US App Store, up from 143 yesterday. But of course, Coinbase can't handle it, or so they say. So move off of Coinbase and go to Kraken maybe, but all these exchanges tend to have the same problems at the same time. So is this coordinated? Yeah, most likely, but I'll let you make up your own mind. On another note, I did find a great tool on Coin Paprika that the Scientific Investor brought up. I didn't even realize this was there, but I did want to share with you guys. Great tool to use here when you want to find out where to put your profits. This is essentially the percent to the all-time high chart, which is so valuable. I mean, Zcash right now is 7,000% roughly off its all-time high. When I get my profits from some of the other coins that I'm holding, I will be investing in assets like this. Zcash is one of them that I would like to do, as well as Dash. I would like to build better positions in these assets simply because they have so much further to go to their all-time high, whereas a coin like Ethereum is already at its all-time high. I don't know how much steam it actually has left in the tank to be able to get to where it needs to go and give those crazy gains that we're all looking for. I would be looking for the assets that are suppressed and that people are not talking about. So go to coinpaprika.com. You guys can check out this awesome tool, and hopefully you guys can utilize this to make even more gains. Next up, Ripple demands Bitcoin and Ethereum docs from SEC amid legal fight. We have the cryptocurrency company Ripple has taken the unusual step of filing a Freedom of Information request with the SEC, asking the agency to release documents concerning its determination that Bitcoin and Ethereum, the two most popular digital currencies, are not securities. That's an awesome move. This request comes a month after the SEC sued Ripple, which we all know. And so, awesome move on their part. Hopefully, we can get to the bottom of this and actually deem Ripple and XRP not a security. I do have a feeling they're probably going to end up going after Larson and Garlinghouse for maybe like the selling of their personal stash, possibly. But I don't know how big of an effect it's actually going to have on deeming Ripple a security, since we all know that you don't actually own a portion of the company Ripple just because you own XRP. So good for them. We'll keep an eye on their legal battle. And next we have crypto lender Blockfi registers Bitcoin trust with SEC. Blockfi is the latest firm to go up against Grayscale's behemoth Bitcoin Trust. We all know that Anthony Pompliano consistently pumps Blockfi in all of his videos, and it looks like they are trying to go ahead and have their own Bitcoin trust. So good for them. Nice to see that Grayscale has some challenging opposition ahead of them, but you know, Grayscale is a behemoth. They have $24 billion under management right now, so it'll be interesting to see who else comes up in this space that may be looking to challenge Grayscale. And so with that being said, that will do it for this edition of the Encrypted Capital Recap for Friday, January 29th. If you guys like what you heard, please drop us a like, comment, and subscribe, and we will catch you all in the next video.